I'm Rachel and you're watching 𝐊𝐶iNe TV live from Sydney. This is the Stocks in Action show. First, let's look at the ASX200 and the ASX listed stocks that are trending today. The S&P ASX 200 is up so far today, gaining 28.2 points or 0.39% to 7,298.4 and setting a new 52-week high. The top performing stocks in this index so far are IRES up 8.77% and Unibail-Rodamco-Westfield up 4.17% respectively. Over the next 5 days, the index has gained 0.53% and is currently 0.5% off its 52-week high. On Wednesday, the benchmark index made a new all-time high for the 6th straight session. However, after touching the record high of 7,334.9 due to profit booking, the ASX 200 slipped and closed 0.31% or 22.4 points lower at 7,270.2. On that note, let us quickly glance through some significant market movements globally. Wall Street closed lower, reverting from the gains made during the early session as market participants became cautious ahead of key inflation data. Investors are looking for cues as to when the country's central bank might tighten its dovish monetary policy. On Wall Street, the S&P 500 fell just 1 point short of its all-time high set in May as technology giants surged along with healthcare stocks. The Dow Jones fell 0.44% while the S&P 500 lost 0.18%. The Nasdaq Composite also closed in the red, falling 0.09%. Let's look at some big news coming in from Asia now. China is on the verge to become the world's leading importer of liquefied natural gas, to surpass Japan, as data released by the independent commodity intelligence service 𝐊𝐴GE, a pricing data and cargo tracking firm. A blend of cold weather conditions, the country's robust economic recovery after the pandemic, and pollution crackdown policies have increased the gasoline demand, a relatively less polluting fossil fuel. The expected shift in demand trend from Japan to China signifies a major shift in the energy market. China has imported 76.27 million tonnes of LNG in 12 months from June 2020 to May 2021. That's slightly down from Japan's 76.32 million tonnes, according to the Commodity Intelligence Service data. It is anticipated that China's 2021 demand will land at 81.2 million tonnes, compared to Japan's demand of 75.2 million tonnes. Tokyo converts most of the gasoline obtained from LNG into electricity. Moving on now, crude oil prices were stable on Wednesday after a rise in US gasoline inventories, followed by US Memorial Day weekend, which is considered as the start of a peak summer driving season. August delivery Brent crude oil futures traded 0.04% down to $71.97 per barrel, whereas July delivery WTI crude oil futures traded at $69.68 per barrel. That's down 0.4% as of the 10th of June this year at 10:23 this morning, Australian Eastern Standard Time. The stocks of gasoline and other fuels rose last week despite witnessing a fall in crude oil inventories. That's according to data released by the Energy Information Administration. Poor weather conditions on the east coast of the United States have reduced the consumption of gasoline. On Tuesday, Energy Information Administration, the official energy statistics provider from the US government, also forecasted a rise of 1.48 million barrels per day in US fuel consumption, up from the previous forecast of 1.39 million barrels per day. Now, before we look at some more trending updates, it's time for a very short break. Stay with us.
New Zealand is unique, and 𝐊𝐶iNe TV is here to bring you all the latest news and trending market updates. Streaming across multiple platforms, so no matter where you are, whether it be at the beach or on the farm, you can count on the team here at 𝐊𝐶iNe TV to be your home for accessing the latest valuable insights into global issues that are affecting New Zealanders. Subscribe to our channels across YouTube, Facebook, also visit 𝐊𝐶iNE.co.nz.
Hello and welcome back. I'm Rachel and you're watching 𝐊𝐶iNe TV live from Sydney. This is the Stocks in Action show. Let's look at this important news coming in now. Australia and New Zealand Banking Group has predicted that the Reserve Bank will hike the nation's official interest rate in 2 steps by 2023, taking the cash rate to 0.5% by the end of that year. It's currently at the historic low of 0.1% and has not been as high as 0.5% since the very start of the pandemic in March 2020. The bank has upgraded its 2021 GDP estimate to 5% from 4.2% and lifted its 2022 estimate to 3.5% from 2.7%. ANZ mentions that the rising rates benchmarks include inflation above 2% and wages growth could be above 3%. It could be reached next year as unemployment drops and GDP rises. On Thursday, the US consumer price data is set to be released. That could report a spike of 4.7% in the overall annual inflation rate. On that note, let's have a look at some more news from the ASX listed companies. First, let's look at this news. ECS Botanics shared that the sales of its cannabis products are forecast to reach $2 million by the end of calendar year 2021, driven by new customer contracts and an increasing demand for Australian-grown medicinal cannabis products. The Victorian facility, which recently completed its first commercial harvest, has recorded current quarter sales of $543,000 of products, including medicinal cannabis, premium dried flower, biomass and oils, all manufactured from cannabis cultivated at the facility. Moving on now, the Australian Securities and Investments Commission has started civil penalty proceedings against shipbuilder Austal and its former CEO David Singleton in the Federal Court of Australia. The proceedings allege that Austal was aware as early as the 4th of June 2016 of the need to make a material write-back of work in progress attributable to the Littoral Combat Ship Programme. Austal made its announcement notifying of the write-back on the 4th of July 2016. As a consequence, ASIC is seeking civil declarations that Austal contravened its continuous disclosure obligations, as well as the relevant misleading and deceptive conduct provisions of the Corporations Act 2001 and the Australian Securities and Investment Commissions Act 2001. Meanwhile, this ASX listed stock is in the news today. Centuria Capital Group has acquired a 14-level $224 million office building located in Victoria. This is for a new unlisted fixed-term single asset fund, Centuria Government Income Property Fund. The fund will seek to raise $133 million, which is Australia's largest single asset retail capital raise within the past 15 years. The 20,191 square metre office building at Footscray was constructed in 2014 and includes 9 levels of commercial accommodation, 4 levels of secure parking and benefits from strong sustainability credentials. The Government Income Property Fund forecasts a 5.2% starting yield and the fund will be held for an initial 5-year term. Before we head to some more trending updates, it's time for a short break. Stay with us.
This is Andy Liu broadcasting from 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Media Studio in Australia, and I'll be hosting the new 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV and join me.
Hello and welcome back. I'm Rachel and you're watching 𝐊𝐚𝐥𝐤𝐢𝐧𝐞 TV live from Sydney. This is the Stocks in Action show. Moving on to the next news, cloud and software business firm DC2 provided an update on its DC Modular Collie project, whereby a number of positive developments have been achieved which take the project closer towards potential future commercialisation. The company has received a grant from the State Government of Western Australia via the Department of Primary Industries and Regional Development for an amount of $200,000 for developing and constructing a new modular, transportable and relocatable data centre in Collie. DC2 has also signed a non-binding memorandum of understanding with Canaponics to explore the potential deployment of modular data centres at their cannabis facility under construction in Collie in WA. Meanwhile, this ASX listed stock is in the news today. Rare earth minerals miner American Rare Earths stated it's acquired scandium mineral rights over the Split Rocks project in WA from Zenith Minerals. Zenith has agreed to grant American Rare Earths an exclusive option to acquire scandium minerals to a maximum depth of 50 metres from the surface within a portion of its Split Rocks project. Moving on, body scanning app maker Advanced Human Imaging has signed a binding term sheet with Toronto-based digital health provider Cuthbert that developed FitTrack, a preventative health screening app. FitTrack has partnered with the company to integrate state-of-the-art body scanning. The integrated technology will be called FitScan and will enable users to assess wellness and predict potential health risks. Moving on, Johns Lyng Group has upgraded its financial year 2021 EBITDA to $52.1 million, a 10% rise from its prior outlook of $47.4 million for the same period. The company sees financial year 2021 revenue to be at $558.2 million, compared with its earlier $524.1 million expectations. The company stated that an upgrade in financial year 2021 revenue and EBITDA has been driven by its core business as usual services and a significant recovery in its operations, primarily in northern New South Wales and southeast Queensland. Moving on now, flower retailer Lynch Group Holdings stated that since its ASX listing in April, the company has experienced continued strong momentum in both key markets of Australia and China. They now expect financial year 2021 post-tax profit of $31 million to $32 million. That's above prior outlook of $28.7 million. The company reports that its China division is expected to exceed performance outlined in financial year 2021 prospectus. That's all from me for now. Stay tuned with 𝐊𝐼𝐴 TV for more live market updates. We'll be back with more news on the markets, economy, diverse themes and sectors. I'm Rachel, signing off for now.